It's been a couple of weeks since last time we saw each other, everybody. Welcome to Elliott Wave Cafe. This is Bitcoin and Ethereum Elliott Wave analysis. So, Bitcoin, it's been acting pretty strong since last time we've talked, and we actually, broke above that consolidation pattern that we've had in that kind of three-wave correction. And we're slowly getting towards those all-time highs at 64,859. The larger trend remains in progress. I am counting this as a second wave cycle, met at about $4,000 last year, and we've done a pretty nice impulsive move in this wave one. And this wave two, by the way this move out of here looks, it's telling us that it could be already completed. However, I do want to allow a chance for it to continue to develop, and only once we're above 65K, I'll gain a lot more confidence that this wave 2 has found a low, and we're actually embarking in this larger third wave advance towards possibly $500,000 a coin in Bitcoin. And things look pretty good. There is a couple of scenarios here that could still temper this advance. I'll get to them in a minute. Before I do, I want to show you a couple of screenshots that I've taken the month of June when we were dropping here and we're making new lows. And I was talking to the guys in our pro room about how the sentiment tends to be pretty extreme, and you're getting a lot of bearish news exactly when the trends are kind of starting to finish, or when the psychology of the masses it's extremely in a doom and gloom scenario. It's very likely that you have to look at Elliott Wave for help, and to kind of look where you are in that sequence, because many times it will help you identify lows. So take a look at some of the slides, back from June 21st. So this one, I took it back then. It was on Bloomberg Crypto. Bitcoin slide towards 30,000 amid China's continued cryptocurrency crackdown is stoking fears of a deeper sell-off. There were plenty of articles like this. The second one here, I don't know which one is this. I think Cointelegraph, like classic bearish chart pattern forms for Bitcoin as BTC price tumbles to 32K. Bitcoin flashes a classical bearish technical pattern. Listen to that. That could crash BTC prices to below $20,000. Another one here from, I don't know who these guys are, Reuters, right? Technology, June 21st, explainer, debt cross. Remember the debt cross chart formation adds another worry to Bitcoin outlook. Unbelievable. This one from CoinQuora, Bitcoin shows bearish trend expected to drop below 30K. So everywhere you will look back then, traders search for bearish signals after Bitcoin futures enter backwardation, which means, that the larger, the far out contracts, usually trade at a lesser price than the front month. So that's when you look at the backwardation. Analysts search for bearish signal after the June Bitcoin futures trade below spot exchange pricing. So, plenty of stuff that happens on the way down. And usually when you get this kind of an articles, I would encourage you to look for them, especially once you have, heavy sell-off, and you can notice. And they usually happen, towards the end of a fifth wave, or just like, after a fourth wave kind of finishes off, and you're getting that final push in that fifth wave, that, the mood of the, of the masses, it's really, really negative. And that was something that, clearly it was obvious the moment everybody was talking about this head and shoulder formation. But guess what? Bitcoin held those 29,000 prices, and those bearish news never really materialized. I'm sorry. And here we are on a rally back to very close to new all-time highs. And not only that, the impulse out of there was pretty strong. So we're going to dive right in and check that. But I also want you to keep in mind some of the things that happened to the upside. So I'm pretty sure if I go back and I take a look at some of the news that we've had, maybe extreme bullish news when Bitcoin was making new all-time highs, and as we were slowing down, I think those news kind of continue to pound the market. So it very well works both ways. but you kind of have to look at the new cycle. You also have to look at where you are in the wave structure and use that to your advantage, because you will start to feel that extreme sentiment, and it's the moment where, when everybody's ready to throw in the towel and sell their positions, is the moment that you actually have to pound the market and get back on the other side and take the chances to your side. So let's dive in, and what I'll do is I'll show you one more scenario here in Bitcoin that I've touched briefly on it a couple of weeks ago, where you see numerous counts that are actually looking at this move out of here as possibly being a fourth wave kind of a sideways move. And I have an issue with this count, and that issue is, it's right here. If you study this third wave, obviously from these lows to this highs, I mean, look at the substructure of this wave, right? And usually wave 3, it's the kind of the strongest wave in an impulsive sequence, right? That's kind of what Elliott wave principle teaches us. You can argue, I mean, this first wave from the lows was pretty strong. The ascent of this first wave was much stronger than the ascent in the third. So the slope of the fifth is kind of even slower than previous 1 and 3. But the issue that I have with this fifth wave is the fact that, you're actually getting a very big second wave in here, right? Which is something that the market, didn't really give you in this kind of third wave advance, and not even in this kind of first wave. So, to me, I have a problem thinking that this move out of here, it's going to be a fifth wave advance. I think that my count and kind of my thoughts, into thinking that this whole move out of here, it's a second wave on its own, makes more sense. Just because of the depth of the second wave, its relationship with this wave 1, it's very large, and it doesn't fit very, very well with the move, to new highs here in this kind of fifth wave. So for that particular reason, I don't really like this count. I am looking at this as, as possibly being a triangle, but not in this necessarily, not in this structure necessarily. I have another count here in the black where I'm counting this a little bit different, still allowing this for a fourth wave. I don't have that count here. I have it in our regular channel, which is, fairly similar, but it changes some of this labeling that I have on. However, this is one thing that could still happen if you're looking, more to a sideways, to a bearish correction in Bitcoin, where, let's say, this rise out of here, it's in a B wave. I'll show it to you in a smaller time frames. And then you're looking for a C, D, and E to complete a fourth wave in somewhere near the 23% retracement of this larger advance. And then you look for kind of a final thrust out of here. So let's continue to move on, but this is kind of where I'm thinking we could still push sideways. Now, the moment you break on this B wave to new all-time highs, you could still maybe stay, in a fourth wave triangle. And if in the Elliott wave triangle structures, you have what it's called a running triangle, where basically this B wave, what it does, so you have this wave A, then B wave moves higher, then you have a C, D, and E, and this creates a running triangle like that, and then you push back up higher. So it's possible that if this move out of here terminates in 3 waves, somewhere up high here, right, even if you make 2 new all-time highs, if you have a sell-off kind of in 3 waves, that this is going to become, a running triangle, and you can still push to the upside. It's still very, very early to have that assumption. For right now, we're going to stay with the bullish trend, and we're going to fall back into this count if there is enough evidence that that's the case. Until then, I think, we're still doing fine considering this move out of here an impulse. Now, the moving averages here are very important, and this is a beautiful trend to the upside. The 200-week continues to support the prices on their descent. The 50-week moving average also provided a very, very well support, back as Bitcoin was dropping back towards that, 40,000, 45K levels. And, this is just a beautiful picture in terms of, how nice of a trend you actually have to the upside. And I'll continue to favor it for as long as this, points up into the right. I will continue to buy the dips into it. And the more this kind of 200-week moving average rises, the more confidence we have that this trend is actually in its full force. And right now, on the 200-week, we're at about 16,000. So, again, just longer term holders from, below, let's say 20,000 to 15,000, I think they have their position pretty well secured, the longer this 200-week moving averages continues to climb. So, I'm personally a holder, and I'm looking at this moving average for protection, and for, adding to positions in case we're ever going to get a sell-off back towards that 200-week moving average. On the 200-day, some interesting things happened. We were a little bit worried, I think, a couple of weeks ago as the market was pushing back below those moving averages. We never really had a continuation lower, and here we are breaking above those pretty aggressively, which means that the market is strong. And now we're looking into the other direction. So now bulls have the upper hand instead of the bears. There is this evidence that you look at and say, well, price broke higher after a 3-wave setback. We are above the moving averages. We are nearing, the all-time high. So you have all the reasons to believe that this move will continue and that you have the wind at your back pushing you forward. The 21-day moving average is sloping upwards. We passed above the 50. And while the 200-day is still kind of sloping sideways with slightly lower, there is a chance that it will push higher here the more these prices continue to push upward. So in terms of defense, we have the moving averages, and we also have some of these swing lows that are going to protect us in case of any sell-offs. So as long as we continue to make higher highs and higher lows in this uptrend, we have enough evidence to kind of stay with the thought process that this move will continue higher. So that's kind of what I'm seeing on moving averages, and I'm just kind of bringing this because it's something that I look at in addition to the Elliott wave analysis. We look at a whole other range of things from support resistance, channeling, trend lines, pure price action where you look at naked candles, price action, all the tools, they have to be part of your arsenal as a trader, as an investor, to kind of look where you are, and you fluctuate up and down between your degrees of confidence into selling your positions or easing up on your position or adding to your position. So this is all it is basically. We are not hardcore Elliottians where if something doesn't look or if a count has multiple choices, or I'm not one of those people that my only, let's say, tool it's Elliott wave. I have to look at other things because markets are fluid, they're complex. There is a lot of other things that can help you out. Now, what's not good, it's having this analysis paralysis where you're actually looking at tons of indicators. So you try, now you throw Ichimoku cloud, now you throw RSI analysis, now you throw, moving averages, convergence, divergence, you throw, pitchforks, you throw all kind of things, and you start to get very confused. So as you advance in your trading career, you will notice that you will tend to minimize the things that you look at, and you become, fairly confident in a, let's say, 3, 4 to 5 methods that you kind of watch. And, that should give you plenty to study a trend. And if you have more than that, you're going to get confused. And I think, you're basically overcomplicating your life. So the less you have, the better. Right? And I think, to me, the sweet spot is somewhere between, let's say, 3 and 5 indicators, no more than that, in terms of kind of how you analyze the market. There is something very, very powerful in simple candlestick analysis and just simple naked charts. And I've used this for, a big part of my, trading journey for about, a couple of years. I've only studied naked candlesticks, and I've only looked at support resistance and kind of how the price behaves. And that journey provided me with a lot of information about how to look at the way the market reacts at certain levels and how it paints it on the chart. So looking, for example, at this 3-month, which is a quarterly, chart of Bitcoin, you can see that the markets were trying to sell off here, and basically you've had only 3 months, only 1 quarter of bearish price action since back in March of last year, right? You've got 1, 2, 3, 4 quarters, so almost, right? So just a year of bullishness. Then you stopped for about 3 months, and I think that is April, May, June, or something like that, right? And then we have July, August, September. We finished the other quarter right here in a bullish close, and we're starting to look again bullish to the upside. Now, if you look at the size of some of these quarterly candles, you will notice that they're pretty high looking back. So just getting, let's say, the month of October, November, December, these 3 months on a bullish candle that kind of compares with this can propel you very close to 100,000, if not to 120,000 looking forward. So to me, what I'm seeing here is I'm seeing a pretty nice bullish development, and the confidence that I get is through the fact that this the previous quarter hasn't closed on a bearish note like some of the other ones have done, right? So every single bearish quarter previously, with the exception of something that happened back here, let's say in 2014, it was followed by an additional bearish quarter here. So you could see back in this advance, and then you can also see back into this correction. So for right now, we've only had 1 black mark, and let's see if we can continue to push higher towards the end of December. I think that's going to be a pretty important clue what's going to happen next year to the price of Bitcoin. So I'm really encouraged by what I'm seeing here in terms of price action. Now let me dive a little bit into some of the smaller time frames. I've done I've shared with YouTube a video, of about, 20 to 30 minutes, where I kind of dove down a little bit into this internals. I think I posted it on Wednesday, if I remember correctly. And it was, just a video where I was, with one of our daily regular updates into the program, where I kind of go to the process, where we are, kind of what the price action is telling us. We are long in this, Bitcoin long trade from about 41,000, 41,600. We knocked down about 50% of the position. We still have 50% of the position on, and I'm looking to kind of reduce that exposure as I'm finishing up this wave 1 of these lows. So if you can see in here, I'm counting this as a second wave pullback in this WXY. And somebody told me in our room, one of our regular members there, that, he's noticing a lot of other YouTubers kind of shifting to this count. Now, I got to tell you, we've had this count, from the beginning. So if you want to get your news first, you got to subscribe to this channel, not to the other channels, because this is where you're going to get your correct information. All right. Just kind of throwing this out there, to try to get some more subscribers. But, I think we're pretty kind of accurate in our approaches, and we have been, for the past couple of years since I've been posting on YouTube, and our subscribers base continues to grow. So I think we're going to hit 3,000 here shortly, and I'll be happy to see double that, if not triple, let's say, over the next year or couple of years. We'll see what happens. Anyway, this looks very interesting as an inverted head and shoulder. You can see how this neckline kind of slopes to the right, is a little bit of a skewed inverted head and shoulder. This is the drop that we've had. Then you have this kind of rounding bottom back in here. You pull back impulsively in this wave 1, nice clean 3-wave setback. We were worried that this second wave correction is going to continue lower. It really didn't. We've identified into the program, this price action back here in the second wave, as the market was trying to punch through those levels, and it failed numerous times, and that kind of led me to believe that this correction is over. We jumped right into the trade. It was a very small risk, and here we are being rewarded with about a $10,000 rise into the price in this larger third wave. I think we're going to get possibly fairly soon, maybe after we do one more push up higher here towards 57, maybe a fourth wave will start to happen, followed by another fifth wave in this wave 1, then a second wave pullback, retest maybe this neckline, and continue to push higher. Now, it doesn't have to happen. The structure, it's not set in stone that this is exactly what's going to happen. We are assuming that we would like to see something like this to kind of keep things kind of clean. But if it's an impulse, it can kind of continue to push higher. Those second waves, multiple second waves could get very small. The trend accelerates higher. It doesn't really give a chance to a lot of people to kind of jump on board. And before you know it, you're at 65, 75, 85, and this push out of here continues. And, you become frustrated with the trend because you don't really get the necessarily pullbacks. And that happens in stocks trends. It's a matter of experience, and it's a matter of just accepting the fact that the markets trend, and they tend to run without a lot of people on board, which is the nature of the markets. So again, that's why I'm trying to stay positioned on the bullish side and take advantage of this trend, let's say, as much as possible. Now, before I jump over to Ethereum here, I want to show you one more chart, and that's that kind of sideways fourth wave triangle that I showed you a little bit earlier. So same kind of a decline in here, let's say in a wave A, where you have a complex move. You have a WXY for a wave A. Then you're moving up higher here in this wave B. And this is that three-wave correction that in case, when it's going to get kind of, the only way it's going to get confirmed that it's a three-wave, it's the moment you break below this B wave. So what needs to happen here for this to kind of take shape is this moves, let's say it's an impulse, you get this pullback in this B. This needs to finish as a five-wave sequence up into the C wave. Ideally, you want to remain below this B wave, above this new all-time highs, and then you're going to sell off in this ABC. You're going to do a C wave, then go back up B for a DE, which means that it will extend sideways. And I don't have a shot here of that second wave, but that was a pretty big wave, as I've showed you before, into the pandemic lows. And in terms of time analysis, it would take us maybe back to May, maybe June of next year for this fourth wave to continue to push sideways into 161.8 time fib comparison with that second wave that I've showed you earlier in the video. So there's plenty of time for this to unfold. I think 100%, maybe it's somewhere, back in here. I'm just kind of giving it a visual look comparison. Then you move to 150% in distance traveled, then to 1618, and then you have a 200%. I think it's back towards the summer somewhere. So maybe the fall of the next year. I doubt that we're going to move sideways for so long, but it is something that I'm watching. So I'm not necessarily expecting a full bearish sell-off out of here, although it could be possible, but in terms of kind of probabilities, this would be my next to-go scenarios in case we are failing in this impulse out of here and we're not continuing higher. Again, you can continue a little bit more, even if you make new all-time highs. You look for equality between this wave A and this wave C, and you can still create a running triangle, right, that kind of moves sideways like that, instead of stopping at the current levels. So go ahead and study those running triangles. Study the sideways triangles in terms of just the converging ones, in terms of kind of what's the relationships between let's say wave B and wave A, wave C and wave A, wave C and wave B. I have plenty of videos, I think, even on YouTube about what these relationships are. Certainly my course talks about that, and that's kind of part of the subscription to our program. So you're learning a lot by kind of taking that. Sorry for the cheap plug here, but it is something that, if you want to study, gives you a pretty good perspective on kind of how you look at this triangle structures, because there's a few types of triangles and you need to know to identify them, right? So you have converging triangles, you have barrier triangles, you have running triangles, right? You have expanding, you have contracting. So there's a few scenarios that you always kind of have to keep in mind as the price action develops. So one more thing I wanted to show you before I jump on Ethereum. Actually, there's like two more slides that talk about seasonality, and this one, it's Bitcoin, right? We were slightly concerned with that September, which proved again to be a pretty bad month for cryptos and Bitcoin in general. So here we go, dropped to only about a 25% of months where actually Bitcoin closes higher than it opens. It actually dropped a little bit. It used to be at about 27, and now we're 25, so it's even lower than before. With an average loss of about 7% in the month of September. And now we're actually increasing in the month of October. It used to be 71, now we're at about 75. And this kind of shows you that it's one of the strongest months of the year. October, November, you're starting to drop into December and falling back into January, followed by a pretty strong month into February. Actually, February is one of the strongest months, at least, going back 7-8 years, what I have on here. So I'm looking at the month of October to kind of continue to sustain this bullish move, followed with November and December. And then before I jump to Ethereum, one more thing I wanted to show you. This is a comparison in terms of, and you're not going to see this very often, but what you see here, it's in percentage of months in which Bitcoin actually outperformed Ethereum. Let's say from 2015 to 2021. And October, it's one of the strongest months of Bitcoin outperformance, and continues actually into the month of November, December, and then we're starting to drop. So if you're thinking Ethereum, and if you're thinking maybe alt, you have to look at the beginning of the year rather than the end of the year. So this is something that just kind of, I started to kind of look into and just start to analyze it. And, I kind of like what I see in terms of Bitcoin performance, kind of goes together with the previous slide as well. And then you're going to look for Bitcoin to lose that momentum against Ethereum as we're approaching January and February, maybe all the way up to May. So you have about, half a year where you're probably going to get some Ethereum outperformance. All right. Just a very, very small pause here. I'm not going to bore you a lot, but, here is our sites. Here is where you can find me, as you can get in touch with me. Elliott Wave Cafe on Telegram, public, premium, head on to Twitter. I only have about 300, subscribers and followers on Twitter. So go ahead and subscribe there, because I want that to kind of move higher. It's a very new channel. I have my own personal channel that I'm not going to share here, but this is the one that I use for, for Elliott Wave Cafe and charts and talk about markets and stuff like that. But, go ahead and give us a subscribe and a like on this YouTube video since you're at it. All right, Ethereum. 3-day chart, not a big change in Ethereum. We've seen this a couple of weeks ago. I've added a note into our Pro chart room as well. A very short wave 2. So it is possible that wave 1 has not completed yet. And what do I mean by this? I mean that that this wave 1 could actually move a little bit higher back here. All right, and somehow maybe this is still a fourth wave forming, or maybe a fourth wave that's done, and the market owes us another move higher before a second wave actually begins. So I have my doubts that that's the case, but I am throwing this out there just through the fact that the second wave is fairly small compared with this, pretty impulsive rise from the pandemic lows. So, keep that in mind. I still think the larger trend is clean and to the upside. I am counting this as a wave 1 and as a wave 2 cycle, just kind of what I've done in Ethereum as well with the WXY correction. And we're continuing to trend upwards in this channel. And based on this, over the next, let's say 2, 4, 5, 10 years, Ethereum has pretty good chances of traveling towards, 400,000. I mean, it's crazy to think that at the moment, but, if this network, it's developing and, it doesn't get market share from other competitors, it's totally possible and highly likely. But we'll continue to see. I know there's several other protocols out there that are chasing Ethereum down, and maybe they're doing things a little bit better. I'm not going to get into that discussion. I'm pretty sure there's plenty of other people that talk about it, so that's not my my niche here. But my my job here is to follow trend, is to follow channels, and to look at the price action. And so far, this continues to look pretty solid to the upside. Here is the other scenario where, similarly with Bitcoin, you're looking at possibility of this being a fourth wave triangle with the move sideways. You have to change the structure because you can't really have a triangle in a wave 2. So you got to switch this to a wave 2 cycle terminated here with another 1, 2, just like in Bitcoin 3, sideways, and 4, followed by a fifth of a larger third wave. So that remains a high probability here for this triangle moving forward. What else? Maybe on the candlestick patterns here, again, just with the move finish back here as a second wave and as a smaller second wave primary, with the retest of the broken resistance, now support. And what I want to draw your attention to is the price action back in here. You can see on the weekly candlestick patterns, you broke higher, a very clean bearish engulfing, that would have made you believe that the prices are going to sell lower. Then you do sell lower, but instead of continuing the pullback, you're getting a bullish candle right next to it that's very similar with the one that happened previously. So here you are, you have a double sandwich. Maybe I will coin this term as a double sandwich when this happens. You know, I would tend to favor the latest failure in price and not the first failure in price. So what this is telling me is that the price were supposed to move lower and they didn't. The bulls came back, took the bears, and now they're having the upper hand because we're breaking to the upside. So based on this scenario, I will continue to favor continuous move higher. I could consider this maybe second wave completed. You know, it's kind of anybody's guess right now, really, but I'm going to continue to go with the evidence that they're having the upper hand at the moment, and we should be pushing higher. If we don't, you know, then we'll move to the scenario where the second wave could still be in progress. As long as you stay above those $1,600 level, I think the bulls continue to have the upper hand. And here is a move. Here is a chart of the lower time frames. Again, W up in X in a triangle. Nice ABC here for a Y wave in the second, down to 1706. Then a nice impulse move in this wave 1. And then, you know, a little bit of a messy fourth wave in here. You could argue maybe that you could move this Y wave over, do that as a 1-2. I have some issues with that. So for right now, I'm going to go with this and say that fine, the second wave is over. We don't have, you know, as much confirmation as we have in Bitcoin because we haven't really broken above this 3676. I think Ethereum might do it over the weekend or coming Monday, and then, you know, we can grow stronger into thinking that this third wave is actually in progress. So you'll get a 1-2 up in 3, 4, and 5 for the wave 1 intermediate, pull back in a second, and a continuation higher. So this is kind of my best scenario moving forward. We'll see what happens, and I'll continue to kind of, you know, I'm doing daily video updates about Ethereum and Bitcoin into the pro room every single day, and we go through a lot of different charts. We also follow a bunch of coins. I actually have, guys, a repository into my MotiveWave software. So this is the motivewave.com. This is kind of what I'm using. There is a link if you guys want to get access to that. You know, it will help me out a little bit. You know, if you guys subscribe using that link, and then you can link your charts to mine, and you can see, I think, up to 30 or 40 coins that I do updates on a regular basis, and they get updated automatically on your chart. So it gets you, you know, it makes this kind of learning process a little bit easier, but you have to subscribe to our channel to kind of get that. So, you know, it is what it is. I can't just kind of hand it out for free there. But hey, we're coming towards the end. This is what we do in the pro room. Go ahead and subscribe to this channel. Give us a like. I'll see you guys in a couple of weeks. I'll try to throw some more videos out there about psychology, about how not to count. I have some ideas about some future videos. I've also done something interesting about the 5 stages in development of a trader. It's a video that I've done, I think, about a week ago. Super, super interesting. I found this article years ago, about, you know, 10 or 12 years ago, somewhere on the web. And, you know, I kind of read that article and just kind of put it out there for you if you want to listen to it. It's very, very interesting. And then I've also done a video, again, I think a couple of weeks ago, about the Elliott wave struggles and things that traders, you know, kind of have issues with. So go ahead and check that out as well. I think it's very strong, and you can find yourself in a bunch of those questions as well. So again, thank you guys for watching. I appreciate you being here. Thanks for being a part of this Elliott wave journey with us. Continue to subscribe and like and share this video so we can continue to grow. I love you all, and I'll see you again in a couple of weeks. Bye-bye.